Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, as we're here this Monday, September 20th, we've not seen this type of swift downside action in quite some time, and it could potentially be a couple of systemic issues here.
It's a global risk-off day across the board. There's no doubt about that. We've been looking for something like this for a while. We're due to have something like this. The blame is falling on a couple of items. Obviously, the news out of China, on the Evergrande and contagion for that situation there. On the real estate plays, some people are harking back to days of Lehman Brothers and Bear Stearns. For those of you who are old enough to remember that, it was a very large macro event that bled across multi-assets and multi-economies, and something that really there was a lot of damage done. Whether or not this turns into that, we'll wait and see. But specifically to us, it is a flight to safe havens, cash, and treasuries.
Yep. I would agree with you, Chris. A couple of our old friends from the floor have been talking about how we're waiting for that one specific event, and you can never identify until after it happens. So it's just interesting to see how this continues to play out. With that said, let's pull up your first chart here. Let's take a look at some fresh technical levels as it stands right now in the Nasdaq-100.
So the NDX 100, the chart's broken. We've broken through support at the 50-day moving average. We haven't seen this happen since the beginning of June. It was only for one day. But at the end of May, we actually opened below the level, and we stayed down below that level for almost a week and a half before rallying again. So significant support resistance areas here in the very near term. One, the stock opened at the lowest point we've seen in well over a month, opening below, if you look at the chart on the purple line, which is the 50-day moving average, at 15,168. We opened at 15,068, and we never even touched that level today. We're selling off into the close. That continuation trade for the rest of the day is going to continue to happen. Support is very, very tight here. We're looking for it to hold 14,850, and if that fails, 14,773. Longer term, the 100-day moving average comes into play, which is also a Fibonacci retracement level at 14,535, give or take a couple of points. That's the range right now. We don't want to see the index trade below this 50-day moving average for more than 3 days. If it does, it will have a new pattern coming into effect here.
All right, Chris, and if we take a look at the last chart here with the individual constituents and how they're performing, is there anything noticeable in terms of positive action within the index today?
It could be worse, right? That's the whole thing here. You know, you've got significant movement. You've got almost every member of the index down. There's only 2 members that are in the green coming into the 3 o'clock hour with 1 hour left of trading, and both on the biotech side. So it's really, you know, how bad could it really be? Apple's only off about 3%, Microsoft's off 3%, Amazon's down 4%. So there's some issues there. But again, a lot of these companies have made relatively new 52-week highs in the last 4 weeks. So there's nothing really wrong with the stocks. It's not really wrong with the stock action. It's a cautious trade, and it's bleeding over to every stock and every sector across the board.
Right. All right, Chris, thanks for putting that into perspective. And thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.